Today I've got extremely important information. The first thing we need to look at affects you directly, and that is the debt situation. Personal debt is, of course, skyrocketing today. The second thing is the central bank digital currencies and how that's going to impact you as an individual. All right. Now, the third thing, I'm going to bring this back around and we're going to talk about the deficits and what they have created. Let's begin. This video is sponsored by Lexington Law. So let's start this off by taking a look at this chart. Continued weeks claimed filed for UI benefits in all programs. And right now, August 14th data anyway, 12.2 million. We've got millions of people today still using these programs all around the world. It's kind of the same situation, whether that's regular state, whether that's some sort of emergency, you got the unemployment assistance, you got extended benefits and so on, all totaling up to over 12 million. Clearly, there are people today that are in need of support. And what does that tell you about this system? That it requires stimulus to keep it going. There's no doubt about it. And you've got credit card debt that's being used. You've got the student debt at 1.7 trillion. You've got all of these different forms of debt. And what do people do? They stretch out the payments. They keep stretching out those payments. Why? Because interest rates are so low, as you know. Now you can see it in this chart form here, just breaking it down. The trend is clear. I mean, it is downward. It has been going down from the peak. Many people have been going back to work. Some of the jobs that were unfortunately unavailable during that period, they've started to come back. But understand, we're talking about millions and millions of people that are still on these emergency plans, and who knows where this is going to go. So what do you have? You have the government coming around and they're engaging in all these different stimulus packages and so on. This article right here out of the Wall Street Journal is from Senator Joe Manchin. Why I won't support spending another $3.5 trillion. Can you believe it? He doesn't support that, and you don't find people in government saying that too often. Amid inflation, debt, and the inevitability of future crisis, Congress needs to take a strategic pause. I'm not going to get into the whole article for you, but you can just see right here there the national debt, $28.7 trillion. Over the past 18 months, we've spent more than $5 trillion. And just saying we need to stop. Why? There's no regard for rising inflation, crippling debt, or the inevitability of future crisis. Ignoring the fiscal consequences of our policy choices will create a disastrous future for the next generation of Americans. I mean, I completely agree with this. And yet you don't find too many that are interested, okay? Why? Because people say, that's for tomorrow. But it affects you as an individual. I know so many people that are in debt, that are up to their chins in debt, barely keeping it afloat. But there are some ways that we can get around this. We can help this factors, all these different things. Now, I want to look at what's happening with the auto debt situation. I'm going to show you some details around that, the central bank digital currencies and so on. But first, let's hear from our sponsor. Debt can yield a crushing blow to many families, hardworking, honest people who just want to get their credit back up to where it should be. That's where Lexington Law comes in. Lexington Law is the #1 credit repair app. Just take a look. They have over 46,000 reviews, an average of 4.7 stars. In the app world, that's extremely rare. Since their founding in 2004, their clients have seen more than 70 million removals from their credit reports. This is how it works. Lexington Law Firm will first research and review your situation. Next, they'll challenge and dispute. And finally, they'll manage and monitor. It's a law firm that will help you work towards your credit goals. Unlike other credit repair products, Lexington Law Firm uses specific laws to protect your credit from unfair situations that are out of your control. Call 844-372-1969 or use the link in the description below for more details. And now we are back to the show. Take a look at what's happening in the auto industry. Inventories at dealers remain well below historical levels. You can see how this has fallen over the period of time. And what does that do? Well, you can see the sales down considerably. Why? People are looking around. They want a vehicle. They can't get what they want. All right. Or the price is simply too high. And then you see the incentive spending per vehicle was down about 40% year over year and down about 4% sequentially in August. All I'm trying to show you here is that generally, they say, oh, we're going to give you $2,000 cash back. They're going to give you this and that. And that has basically been going down, down, down. Why? Quite frankly, they don't need to give you anything else because people are so desperate right now at this time. Debt is piling up around every corner, and quite frankly, it won't be paid back. That's simply the way it is. Governments, they offer a safety net, but unfortunately, it's running out right now. So whether that is Social Security or any of the other programs put in place, as Senator Joe Manchin was saying, these things can't last forever. It is so important to get out of debt, and there are many different strategies, but I think it's important to change your payment frequency. Instead of doing so once a month, maybe you do it bi-weekly, and of course you can consolidate your debt too. You need to know how to do these things. It's so important. Many people, they pay the minimum balance and they let these things stretch out, and you're paying interest to those institutions, but it should be money in your pocket, not in theirs. So let's take a look right here at the central bank digital currencies. Now, I've always talked about the IMF, the SDR, and what they have said, what they have done, and now we're seeing something else. Central bank digital currencies to be tested in BIS experiment. The Bank for International Settlements, often known as the central bank for central banks, they're talking about doing something a little different. So the Bank for International Settlements will test the use of central bank digital currencies with Australia, Malaysia, Singapore, and South Africa in an experiment that could lead to a more efficient global payment platform. Now, first of all, you don't see US being included in that. Interesting, to say the least. However, what I have been talking a lot about, especially on the Money GPS Live, has been the introduction of central bank digital currencies and linking them up with the different governments and making this the new normal. Okay, part of the Great Reset, all part of a new monetary system. And of course, that will include the dollar to some degree, but perhaps not with that hegemony. So the word that you need to know about is this, Project Dunbar. The study aims to develop prototypes for a common platform that will enable international settlement in digital fiat currencies issued by central banks. And remember here, so the BIS can be like the head of it all. And you have the other central banks around the world that can connect into it. And so what do we have? We have a loss of sovereignty, a disconnection from the money once again. It used to be gold. It used to have some sort of backing, and then it was just promises. At one point, it was actually the US dollar, and then it became the Federal Reserve note, and you just go further and further and further back. Now, they're talking about the different examples here. I would recommend checking it out if you have the time. Australia, Singapore, Malaysia, and South Africa launch joint CBDC pilot. This is coming out of Cointelegraph if you want to read it from that angle. So I'm giving you two sources there, but I think ultimately we're looking at the same information. I think this is the type of thing that they are pushing for. And of course, your debt will be included in this new system. Don't think that they suddenly go to a new monetary system and you get off scot-free. Watch out. Watch very clearly. Now, this is interesting because you've got on one hand people in so much debt like never before, and on the other hand, you're looking at the stock market doing incredibly well. Speak no evil of the S&P 500's never-ending records. Investors buying stocks no matter what shouldn't fool themselves that the future will deliver the chunky returns over the past decades, and essentially just saying there hasn't been a 5% correction in a very long time. They get into the details of that. I just want to show you the other side of it all. This is showing you how there's this huge push. So the governments today are really, really pushing for the green energy. And you compare that to, these others, they're just showing you the primary energy consumption by source in the world, 1965 to 2018. Oil, right at the top of the list. Coal, natural gas. And then at the very bottom, a very, very small amount, hydropower, nuclear, wind, other renewables, and solar. Okay? This right here just shows you the chasm in between what we call, the so-called safer ones, the ones that are great, and so on with, these are the old style ones, the oil, coal, and natural gas. And I think for people, we need to understand they're going to invest a lot of money into this. So as an investor, you know where the money is going to. However, we must understand the world that we live in and the energy consumption today as it stands. That's the only point I'm making, okay? Because you see all these things in the news, how we're doing this, we're doing that. But you as an individual, you got to take matters into your own hands whenever you can, okay? Maybe the government's not going to be able to provide you solar power, but maybe you could if it makes sense in your area, right? And then there's just a few charts from Northman Trader showing you here the ECB and the Fed have added $7 trillion to the combined balance sheets in just a year and a half between 2008, so the financial crisis, and 2017. In those 10 years, they added $6.5 trillion. This means that they bought more assets in 17 months than they did in 10 years. You go down even further, see some other crazy stuff, okay? They've injected another $1 trillion in the past 3 months between the ECB and the Fed. And this last one, it took the ECB and the Fed 3 years to expand their combined balance sheets by $1 trillion in the period immediately following the great financial crisis between 2009 and 2011. But check this out. What took 3 years then took 3 months today. Unbelievable. Now again, debt, deficits, same subject, bringing it around for you. Looking at this, you remember the articles and the topics and the videos and everything that I've covered, and you've seen it elsewhere, also related to the ghost cities in China. This Bloomberg article, it is lengthy. There's a lot of pictures though. There's a lot of explanation about it. If you want to know what's going on with the ghost towns, this one is going to be in the sources, in the description as always. I don't have time to get into it all, but if you want an update, check it out. Apparently, people are moving into the cities. That's the long and short of it. And then a bunch of people were saying, I was speaking nonsense about Social Security. I'm talking about the safety nets here that are in place for a lot of people, and they are going to be cut. Yeah, GPS, I've heard this all my life. Take a look at this article. Mishtalk had this to say, and they really break it down, showing you the charts, showing you the numbers, and showing you the actual math, and making a lot more sense of it than certainly I have done. And this is the details that you need to know. The link will be in the description as always. And if you're not already, which I don't know why you're not, but if you're not an insider, you've got to join the insiders. It's totally free. 5 days a week, I'll send you an email with the video of the day. If you want to sign up, check it out at this card up here or at themoneygps.com. And as always, if you want to make a unicorn smile, hit that like button, hit that thumbs up button to let me know and let others know that this is a fantastic video. All right, if you haven't seen this video already, you definitely want to check it out. Click it and I'll see you there.